Hello, and welcome back to the second webcast in Merchant Link's Payments Education Series. I'm Beth McGarity, Marketing Manager, and with me in the newsroom is Zachary Minton, Manager of Learning and Development. In our last installment, we discussed the transaction flow and the key players involved in processing. Over the next few minutes, we'll take a closer look at the financial relationship between each player and the fees that are collected by each entity. First, to our news anchor, Zach. How and when do merchants determine the fees they pay on each credit and debit transaction?
Thanks, Beth. Fees are established for every merchant when they sign their merchant services agreement with an acquiring bank. Depending on the type of merchant, there may be ways to negotiate or set up the fees into effective rates or bundles for simpler processing costs. In our fourth video in this series, we'll take a closer look at different pricing models, how to make the most of your merchant services agreement, and determine the best pricing model for your business. In general, though, all merchants agree to a set of fees when they sign the contract to accept credit cards. For a breakdown of what these general fees are, I would like to introduce Emmanuel Barnes, our financial correspondent. He will outline the types of fees merchants pay per card transaction and what we should know about them. Emmanuel, can you walk us through the general fee structure?
Absolutely, Zach. I've always found it easiest to understand the fee structure by first identifying the different types of fees and then looking at a simple transaction example that demonstrates how the players collect those fees. First, a flat fee is a fixed amount that generally covers the processing costs the bank assumes for handling the transaction. As explained earlier, there are many ways to negotiate the best, most effective fees based on merchant type, size, and transaction volume. Next, there's the discount rate. Now, this fee has an interesting name as it gives the illusion that merchants receive a discount on the fees they pay. Actually, it's the fee assessed per transaction that is a percentage of the total sale amount. This percentage is discounted from the total sale amount when the settlement occurs and funds are deposited into the merchant's account. This percentage fee or discount rate varies by type of merchant, but generally ranges from 1% to 3% of the total sale amount. This fee is shared amongst all the players. In addition to the flat fee and the discount rate, merchants pay a flat fee per transaction to the gateway provider for translating, securing, and delivering the transaction to the processor, along with a monthly account maintenance fee to their acquiring bank for handling their merchant and deposit account services. There is also an association fee or an assessment collected by the card associations for each transaction to fund marketing efforts for the card brands and to support the card network regulations. Now, the last fee that all merchants should be aware of is called the interchange fee. This fee, established by the card associations, was formerly known as an issuer reimbursement fee. Part of what every merchant negotiates in their discount rate includes an interchange component meant to reimburse the issuing banks for the risk of financing and guaranteeing payment for every credit transaction. Because this fee can vary widely on a per transaction basis, it remains one of the most misunderstood fees in the total fee structure.
Yes, indeed. In fact, since there's so much to understand about interchange pricing and how a merchant's acceptance environment affects it, we have dedicated our entire third video installment to the topic. So, Emmanuel, are all these fees charged on every card type?
No, in fact, certain card types issued by companies such as American Express and Discover do not have an association or interchange component in their fees at all, but rather they assess a flat fee per transaction to cover their processing and financing costs.
When these fees are assessed per transaction, what player actually collects the fees and how do they determine who gets what?
Here's the interesting thing about the fees and how they're distributed. The processor and the merchant's acquiring bank collect the fees by deducting them from the total batch deposit before moving the funds into the merchant's account. It's at that point that the fees are broken down and distributed among the players. The best way to demonstrate this is through an example of a very simple card transaction. Let's say that a merchant processes a $100 Visa transaction. And let's also assume that everything about that transaction qualifies the merchant for the best rates possible. The amount discounted from that $100 transaction is $2.25, leaving the merchant with a total of $97.75 in revenue. The first fee paid is to the gateway provider for translation and delivery services. The next player is the third-party processor and acquiring bank. The processor receives 24 cents for processing costs, and the acquiring bank receives 10 cents of the discount rate for managing the relationship with the card networks. This leaves $1.90 left to distribute amongst the remaining players. The card association receives 15 cents, and the remaining $1.75 is distributed to the issuing bank as interchange. Altogether, of the $2.25 fee assessed on this $100 transaction, even though all players gain revenue, the greatest share goes to the issuer.
Emmanuel, why is it that the issuing bank gets the majority of the fees assessed on card transactions?
Zach, the cost basis, or the reason the issuing bank collect the greatest portion of the fees, has to do with the risk they incur when guaranteeing payments to merchants. The issuing banks are financing the lines of credit that allow cardholders to purchase goods and services. Since the merchant has been paid for the transaction, the issuer runs the risk of not being able to collect for funds spent or for disputed charges. In the end, the associations and its member banks determine the interchange rates that apply in different acceptance environments. While the gateway and the processor perform some work, the majority of risk essentially lies in the cardholder's bank. Therefore, they collect the majority of the fees charged to the merchants accepting their cards.
Excellent. Thanks, Emmanuel and Zach, for that great report. Join us for our next video where we'll explore interchange fees, how the associations calculate them, and how events that occur at the merchant location can cause these fees to inflate on a single transaction. From all of us here at Merchant Link, thanks for watching.